What is the tick index? So, according to Wiki and AI, just anything that we can throw out there to ask, what's the tick index? The ticks index represents dollar sign TICK. It's a market indicator that measures the number of stocks on the New York Stock Exchange making an uptick minus the number of stocks making a downtick. So, it's a math formula. It's a snapshot of market sentiment showing whether stocks are being bought, indicating a positive sentiment, or if stocks are being sold, indicating a negative sentiment. For an example, if there are 2,800 stocks listed on the New York Stock Exchange and 1,800 of those are making an uptick, while only 1,000 of those are making a downtick, then the tick index would be plus 800. And that would suggest more buying pressure than selling pressure in the market at that time. Now, that's a pretty common description if we go searching for things that are about the tick index. And this is a tick index chart right here. This is not to be confused with a tick chart. This is a tick index chart. Very different. You'll notice that there's a zero here, and then we have above zero and we have below zero. You'll also notice that it's really wicky and gappy and just kind of jumps all over the place. If we zoom out into a higher time frame, you'll notice again that we're just maintaining in this zone. Even on a daily, weekly, monthly, we're still just holding in this zone because we're just looking at a math formula. If you're on Thinkorswim, you can see a lot of the other indexes, and you can see that there's the New York Stock Exchange tick, the Nasdaq, the Dow, they all have a tick. The S&P, all of them have a tick. All right? So in every market, every index like the S&P, the Nasdaq, the Dow, the Russell, the New York Stock Exchange, there's a basket of stocks. And what this is doing is measuring the stocks that are advancing versus the stocks that are declining. Every stock has a tick. So if we just go to SPY for a moment, SPY is a penny tick increment product. The chart moves from one penny to the next. 521.60 and then 521.61.62, right? It's just one penny at a time. That's the tick, right? But if we're looking at something like, say, bonds, this has 32 fractions of a tick, right? Every tick is 1 over 32. That is really confusing, but that's the tick size. If we go to something like the NASDAQ, this moves in ticks of 25 cents. So 1 point has 4 ticks. These ticks are just how far that market moves. But when we're looking at the New York Stock Exchange, or if we're looking at the S&P, the Dow, the NASDAQ composite, those indexes are full of stock, and stock moves at 1 penny increments, 1 tick increments. And so when we're looking at the number of stocks that are moving into an uptick versus the number of stocks that are moving into a downtick, we're really looking at who's hitting the ask and below, who's hitting the ask and above in how many companies there are. Oddly enough, the most popular of these tick indexes is the New York Stock Exchange tick. It's the oldest, the most popular, the most widely used, and I don't know anybody who uses the other ones. It would seem intuitive that if you're trading the S&P, you would want to look at the S&P tick chart. If you're trading the Nasdaq, you'd want to look at the Nasdaq tick chart. Oddly though, nobody does that. Everybody still looks at the NYSE tick chart, no matter what chart they're trading. So again, one of the descriptive structures of this thing is that there is a zero line. If we were to mark out that zero line, and I'm just going to use the indicator here that I made, but we could use drawing tools just as easy, right? So we'll just add some lines. That's all I did here is just add some lines, right? If I took that off, we could use a drawing tool and do the same thing. We can see the zero line, We can see -5, -7, and then even deeper into -1000. And we have +500, +750, and +1000. It's still candles though, and that can be a little messy, kind of hard to see. And every time I get my mouse in there, it brightens up and it's kind of hard to read. But it's still, in my opinion, better to read than these candles, right? So we'll just remove all this. We can use the lines. So we just come down here and add price lines, 0, 500, 800, 1000, same thing in the other direction. One of the things that we want to look at is on the day, how we doing? Are we mostly below 0? Are we mostly above 0? And then if price is making a move, say it breaks out, starts running hard to the upside, we want to watch the ticks to see if it gets pushed into the extremes, like a +1000, or if we fall out and we start falling really fast, does the tick get into a -1000? On this other screen here, I loaded the tick down below in a line, so it's a lot easier to see. And I put the S&P on the top. I went looking back on a day so I could show you some examples. And here is where the S&P was kind of breaking down, right? It opened, it broke below the open, and then stalled out until around 11 or so. And then it broke down again. And it broke down fast trying to get this gap closed. Look at what happened in the ticks. We got down around that -750 area and price stalled out. Now, it turned around there and it started going back up. That's not necessarily a given, but the stall, the pause is definitely something that you could expect to see after hitting an extreme. Let's see if we can find one going in the other direction. Here we had a breakout to the upside and price got into that 750, 800 area and we kind of stalled out. It would be better to get into +1000 or -1000, but as you can imagine, we don't get those very often, right? That's kind of extreme. It is possible to see, but we've been kind of range bound over the last few weeks, and I can only go so far back on this time frame. So it makes it harder to really kind of spot them out. But that's exactly what you can do. Now, I always recommend people try different time frames. I love looking at the tick chart on a 2-minute time frame, but you can look at it on a 5, a 15, a 30, even an hourly and a daily. It just depends on what you're looking for. If you're looking for these plus signals, right, the +1000 or the -1000, probably a 5-minute, a 2-minute, certainly even a 1-minute wouldn't hurt. And that's just fine. But if you're looking for some breath on the day, trying to ask that question of how we doing? Are we staying in the green? Are we staying in the red? Then I kind of like those bigger time frames, the 15-minute, 30-minute time frames. That way you kind of get a feel for, hey, how are we doing? And if it's a day where we are just crisscrossing back and forth, just chopping all day long, then that's probably what you're going to see in price is that we're just chopping along sideways. Keep in mind, though, that this is the New York Stock Exchange tick. It's not the S&P. So here, for an example, we had the S&P with a nice breakout day and it just ran all day. And the ticks just chopped about above and below the zero line all day. We didn't get any help here. It wasn't showing us bullish extremes. It wasn't hitting at the upper edges, showing a bullish backdrop in the market. And the S&P just kept going up. So it's not a universal system. It can't be used, isolated all by itself. It's just one bit of information telling you at this particular moment in time, how many stocks are going up versus how many stocks are going down. And then we can use that. Now, since there are multiple indexes that have a tick chart, right? There's a tick chart for the Dow, the Russell, the S&P, the NASDAQ. We could look at all of those indexes and ask, hey, are they all going up? Are they all going down? Because that would be really bullish or really bearish, right? The entire broad market all going up or all going down at the same time. So that is the tick index.